Ever wondered how the ADP employment change impacts the Forex and stock markets? Let's unravel that mystery. The ADP employment change, released by automatic data processing, provides a glimpse into the non-farm private employment. It's based on the payroll data of roughly 400,000 U.S. business clients. Consider it an early warning system for the health of the labor market. This report is a snapshot of the U.S. labor market's health, a key driver of overall economic performance. Now you might be wondering, how does ADP employment change impact the economy? Well, let's delve into that. When we see a higher than expected increase in the ADP employment change, it's generally a signal of a strengthening economy. This can lead to the appreciation of the US dollar. That's a good indicator for those trading in Forex markets. But what happens when there's weaker than expected job growth? This can lead to a decline in the US dollar and US stocks. It's like a seesaw effect. When one side goes up, the other goes down. Now let's talk about investor confidence. When job growth numbers are positive, it can boost investor confidence in the US economy. This may result in a strengthening of the US dollar and a rise in US stocks. It's all interconnected. The ADP report is an important economic indicator that can impact financial markets, including the Forex and stock markets. It's a crucial piece of the economic puzzle that helps paint a clearer picture of the market's health. And how does the ADP employment change influence the Federal Reserve's monetary policy decisions? Well, financial markets keep a close eye on this report. It's like a barometer, measuring the health of the economy. If this report shows sustained improvements in employment data, it might just prompt the Federal Reserve to raise interest rates. And what happens then? Typically, the US dollar strengthens. So, the next time you see news about the ADP employment change, you'll understand just how significant its impact can be on the financial markets.